following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. Let me just finish this left side, right side price time match in the E-mini 10-minute chart, having made a peak D top. There we go. Okay, so the level to watch for those of you intraday trading, that low that was made at 9:40 on the 18th, yesterday. No, this time yesterday, yeah, a little 13 hours ago. 25 hours ago. We're looking at the low of 2,508.25. And that gives you, not that I couldn't move it out one more bar, that gives you until 12:10. So we got to watch that, and there's a downtrend line right there. Make that pink. The downtrend line says that the support of 2258 will be next. We're at 2261, down 550. Sudden drop in the market. Having made that peak D, very quick peak A, B, C, and D. Now let's get out of this and we'll move that away. At 120-minute chart, try to break that downtrend line. There's an apex coming. Now we've gone above it, we've gone below it. But what's most important now is that the 200-period exponential moving average right there at 2260, between 2260 and 2261, that's going to be key support. Okay, enough with that. What we've got here is the H pattern that went to an M pattern in the daily chart. Weekly still having a high-level consolidation, but you have taken 5 weeks and still not to break into the 2280s. Says something about this high-level consolidation and the rotational aspect. After all, you saw the semiconductors act very well yesterday and the high-techs, and yet we haven't yet followed through yet. Looking at the QQQ series, remember we spoke about this yesterday. I said 123.37 was the high. We could go a little bit above it, but there's an up channel, and within the up channel, you've got a technique that I call the Chapman Wave Inside Track. Repellent zone, and it's exactly where the price so far has been repelled. If you look at Netflix has gone above that channel, and we're going to be watching it closely. The chart patterns are paralleled a little bit, but most importantly, let's just run the numbers. Thank you to Tommy and all the rest. Great programming today. What is today? Thursday. So we're going to be going all the way through until 6 o'clock. Here we go. The Dow. The Dow has made this H that goes to an M. One of the reasons why we are shorter position in the Dow is because the struggle with the MACD being very, very weak. That's the moving average convergence divergence. Just hasn't shown any support whatsoever. And the stochastic just keeps going down. And the on-balance volume, that blue line, that's how I use volume, keeps going lower. And that says, be careful, because 19,718 has been the support. If we take that out, that's going to be a problem. Let me go to this quickly. There's the 120-minute chart. Wow, fascinating. Oh, isn't that nice? So what we've got here is this technique that I've been working on with or without anything other than the price, without any moving averages, with moving averages, in a combination of ways, because I really do like to test techniques out for a long time in real life rather than just theoretically. That's the only way that you can really prove a point. And this seems to me to be the new leg 5, Chapman Wave 5 in the 120-minute chart. I discussed it yesterday. Maybe if we have a chance tomorrow in Technical Friday, we can spend some time. All it has to do is to go to 19,738. That would start 5 to the downside, confirm 5 to the downside. And at that point, you could start to have another bounce. What this does here in the other techniques that I've developed over the years, in which I've shown my subscribers and to my for the people who did my webinar, my 3-part webinar. Look, here's your left side, right side price time match. I had notated this it's been there for a little while, and today is the very last day of this particular pattern. Otherwise, I have to extend it out. It also has this downtrend line and down channel. It got repelled in the inside track. This is the 120-minute chart I'm showing, Dow. The inside track repellent zone. It's coming into now I need to do this. Make that pink, make this green, and you'll see exactly how this technique works. Here we go. Put that in right there. Extend a little bit, goes right to that low that could come in, maybe even today, who knows. Right there. And that's now the propellant zone. We've gone below the 17. No, that's not an E. That will be leg E the moment it goes below 19,739. The stochastic's flat, not showing any strength, but it is flat at 21%. And the MACD is negative, and you can see the histogram is expanding still. So far, this is exactly the action that we were talking about for my subscribers. I do this every day. I show the Dow chart. I explain it. I wonder if I can find it right here. Let's see. I'll find it in a second. Not there, but it is here. And when we're looking at it, what it does show is, there we go. So what we've done is, within the context of all the different techniques that I have, if I can just find it, here we are. So what I had said was, for subscribers, there's the same chart, the 120-minute Dow chart. I showed you the wave 5 to the upside, wave 5 to the downside. X started a new move to the downside. That's where you need a little bit of, that's the only artistic license that I really give here, is where am I going to start the next down move? Because this could have been an up move, but it wasn't. I had to wait for a move to the upside and then call it X, and then we start 1, 2, 3, 4. Let's see if we're going to get a 5 to the downside. So this is from last night. And here it is, shows the 120-minute chart. There's the left side, right side price time match. The MACD was flattening out, but it hadn't shown any real strength, and stochastic was flat. What's it doing? Here's the live thing today. There it is. So you've got that extension down. We haven't made 5 yet. And here's the extension down towards E, but it did get repelled to the 9-period moving average. I said 19,803. The 9-period exponential moving average will be the area of resistance. We went a little higher today. We went to 19,824. Okay, so the other things that I show was, here's the pattern that we were looking at for the Dow right there. And that shows you strong technicals, weak technicals on the recent 90,999 high. And what happened is you've used time. We still have used only time and not price. This is not a big deal to go from let's call it 20,000. No, you have to call it 90,999. 20,000 has other implications, down to the 17,000, 90,739 area. Hey, that's nothing. That's just using time. But it is that H that goes to an M pattern with very weak technicals. And then I give what I'm expecting, and I do expect, I said today, I might see a holding pattern as the Dow closes again under the 9 EMA narrow range. And then, of course, I give all the other charts. I give the overview, etc. Now let's go to let's go back to the nitty-gritties. So we've got the Dow. Let me move that away. I can't see my clock. My clock is right there. Whoa, we're almost out of time. So I do want to go to the QQQ, which I showed. The QQQ went to a new high in leg F. I'm calling it F for now. It could be an alternate count, F/C, but just for the moment, I'm going to call it F. And then I'll do all the rest when we get back. There's no rush. We got at noon tomorrow, we have a new president. So we've got time. I was just wondering if we wouldn't get to 20,000 before President Obama goes out. We'll see. Okay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Good question I had from Peaky in the Den. It says, what does the leg C in the QQQ Weekly say about any market slide, Basil? So what it says is, there's no other way I can count this at this particular point. It really looks like a leg C. I'm going to go to the daily in a moment. And the 120-minute chart, I've got a G, so let's just see what happens here. It could be very interesting over the next 4 days, 5 days. What it really says is that there could be a consolidation that goes to the 121, 120 area. That's where the 9-period exponential moving average is in the weekly. The MACD is very good, not strong, but very good. The stochastic is strong at 88%. The 9-period moving average is still running very strongly with all the other little indexes, the moving averages that I have working in concert. It really says that there could be time, and we could have, I'll just put this in. I'm not sure I want to keep it there, but I'll put it in for now. Maybe just a tad higher to the 124 area where the moving average resistance is in the daily. But it could even, over a period of time, go high. But I wouldn't be surprised if we've got something like this. I say limited upside from here in the QQQ series, but also fairly limited to a 3%, I'm not sure about a 5%, but at least a 3% correction using time. The stochastic in the daily is at 92%. The MACD is still good. Now, there are a couple of things. I have to call this F/C. Why? Because the low that was made on the 30th of December at 118.14, theoretically, I've counted most of the other charts as if that was the low, and that means this should be leg C. All right, and it says you can pull back, maybe a nominal D and then pull back. Most important is if there is an unconventional flat base restart, then we have to be very careful because within a week there should be some kind of a pullback that starts to accelerate lower, and then that whole area of that low that was made on the 12th of 118.47, that becomes a target. I just don't want to go there right now. I don't see any reason. I can put it in as a what-if situation. You haven't even taken out the 122.52 level of the 9-period exponential moving average. That would be the first step. A close under that says 122.02 is the next moving average support. So let's just do one thing at a time. It's in a containment area from here. I think limited upside, but maybe a limited downside. We're going to be watching it very closely. All right, so now let's go to the NYA. New York Stock Exchange, again, just it hasn't broken this wedge formation right there, that falling X at 11,166 down 30. You really need to see a close above the high of the 13th of January, above 11,244. That'll be very important. And then all of a sudden, once that happens, you can start to see testing the highs of 11,264. In the meantime, the weekly chart is saying, hey, consolidating, no big deal, just consolidating. Look at the IWM. It's a little different in that it has made a series of lower lows and lower highs. It has taken from December the 9th at 138.82, all this time, and it's only gone down just over 4 points. That is remarkable. That is really good. That's very good consolidation. The weekly suggests that there might be a little bit more, and we'll just deal with that. And all I can say is that a close below 133 would suggest, yes, you could take more time, and then you'll start to see the QQQ series join in. Now let's go to the IYT, which had spectacular announcement this morning when CSX came out, and who's the other one? CSX. Oh, have I got it here? No, I don't. I'm forgetting the names of my rails. So you got CSX. Anybody help me out there? CSX is soaring. It's up 6.52 at 17.69. I looked at it yesterday. I thought, you know what? That definitely looks like, not yesterday, the other day, that definitely looks like a leg B. It doesn't look like a G. It just has all the characteristics of a B. And wham, today it goes to leg C. And that's really important. UNP. Thank you very much. I knew it was a UN something. United Nations. Union Pacific had a big spike to the upside. That one's giving back some of it. So the XAL, which is the airlines, just stuck in this trading band. No big deal. Upper level consolidation. I think the airlines could test the 109 area soon. A break above 150. Well, it can't be 155. 115. A big difference there. I just put a 5 instead of a 1. 115.55. A close in the 116s would be really positive for the transports. I think they just kind of stuck here for a while. Now let's do something a little unusual. I will go to the TLT. A lot of questions about the TLT. Pulling back at 120.03, down 98 cents. Was this a peak C1, C2? Is the TBT having the exact opposite? Is this a leg B in a brand new move to the upside? Well, remember what I discussed. I said that my impression, I'm going to get out of this for a moment. I forgot to show you that a moment ago. Let me just do that. This is, I think I did that, didn't I? Yeah, I discussed the E-mini having a bit of a bounce right here, down only 275. Held the support. Now, I could have done this. I didn't have time. I could have done this and put in a new trend line for the Chapman Wave inside track. That's normally what I do as I'm trading. I would say, okay, that's going to be the support. Bam, it hit the support exactly. I should have done that. Sorry. So this is a gray leg A bounce material. I just think we're consolidating. There's nothing much going on right now. There's a wait and see attitude until next week, and then we're going to see some real action. So the TBT has gone to trough A, B, C, D, and an E. The stochastic turned around very sharply, has now gone to the 25% area from the single digits. The MACD has turned up. The histogram's improving, but it hasn't crossed positive yet. So I'm calling this gray A and gray B. Why is it gray? Because it's under the previous Grand Canyon high of 42. I should have typed that in, right? Oh, it didn't make it, yes. 4270 to 4272. On the 16th, it went to 4272. I always have to put that in, otherwise I'm liable to say tomorrow, what was that price again? 4272. And I actually did remember because it was 1216. 16. Okay. Now, this has to be, at this point, you call it a counter trend rally. That's not a negative. It's an explanation that it is trending counter trend to the biggest move that it had. It hasn't given anything like a buy. It's more like a buy signal, but it hasn't gone to a buy mode. The weekly chart suggests that it could turn around, but it might just bump into some resistance here. And I always like to have fighting, competing technicals. And that's the technicals here say, yeah, you might be able to move to 40.80. But that's going to be the real test of strength. You're going to the 41s, and all of a sudden you're looking at the TLT starting to decline even more. So I'll be back. Basil Chapman, Tiger Technicians Hour. I've got the questions all lined up. Everything from Morgan Stanley to the TLT to CSX. Oh, I've done some of it. Oh, and there's Norfolk Southern. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the question really is, Danny in the Den wants to know about the euro. So the euro, USD JPY, that's the United States dollar, Japanese yen currency pair, has made that pattern that I call the falling axe. This is just a declining cone with lower highs, much lower lows. And basically, it's gone from the 180, oh, this is the one with all the numbers, 118.658, high of the 15th of December, down to today's low, yesterday's low of 112.559. Now trading at 115.16. And the question is, how high can it go? So what I will do is, let me just show you this. Keep your eye on this left chart. This one here is the daily, this is the weekly, this is the monthly. Here's the 120-minute chart, A, B, C, D, E. Made a peak E right at the 200-period moving average in the 120-minute chart. Now, keep your eye on the left one. Watch, watch, watch. Look, look, look. Here we go. And what do we have? It's slightly deeper, but it has the characteristic of the chart that we were just looking at. And what is this? This is the TBT, which is the inverse of the TLT, ultra short Lehman 20-year Treasury bond ETF. And that says that a break to the upside, it's at 40.12, a break to the upside of 40.65. No, it needs to close. It needs to get to 40.75 and then close. No matter what happens, it can't close back inside. So it has to close above 40.38. Those are the numbers for tomorrow. Now we're going to go back to the EUR USD currency pair. Is there a problem? I guess there is a problem. Sound back. Okay. Let me do that again. So the sound was 12:30 and we're not right now 12:32. Let me do that one more time. TBT says that the dashed line, call this the green line, call this the red line. Now, in my work, when there's a red line, it really does mean a red line. You can't obfuscate. You can't say, oh, yeah, I didn't mention a red line. A red line is a red line, and that's that pinkish red line there. That's the sell zone within this falling axe formation. And that says that the TBT going to 475 maybe tomorrow, if there is a weakness in the bonds, then the TBT will rally. And it needs then, after that, to hold in the 40-30s once it breaks out, if it does. If it takes out 39.50 before then, that just says TLT is on its way higher. Okay. But the TLT is not a very good-looking chart pattern from today's action. Two gap downs like this, not happy about that. Now, let's go back to the EUR USD, and you'll see what I'm trying to do. I'm trying to pair, in this case, it's the currency pair, but I'm trying to correlate like with like, apples to apples, oranges to oranges, even though they might be different fruits. Maybe it's the shape that I'm looking at. And you've gone to a leg D already, a peak D in the euro dollar. It's holding well. Keep your eye on this particular pattern. Keep your eye on this. And here we go. This is the left side daily euro dollar currency pair, trading 1.063. That was the wrong one. That's the euro dollar. That has gone to a D. I want you to just do this. And here's your peak E in the gold. Can you see the relationships here? Let me go back to the USD JPY. Keep your eye on this one. Here we go. Left chart. You see the rally within the context of a very sharp pullback. This one has a little different set of numbers because the difference is new parallel. Make that red. So within the falling axe inside track resistance, that's exactly the area that I'd be looking at. So now let me try to put the whole thing together. If the dollar Japanese yen currency pair is going to rally at 115.17, it has tremendous resistance starting at 116 to that trend line there at 116.66. However, if it does that, there's a real good chance that the TBT will very quickly break the resistance and it will go to the 40.75 level. But I'm looking at the weekly charts, and the weekly charts of the TBT, the weekly chart of the EUR USD. Remember, I'm trying to put the pattern together with the pattern. I keep doing that. It's not that. It's USD JPY. I'm just so used to going to the euro dollar. This is the Japanese yen. You see that pattern? Making like a cup and a handle. That says that it's really important that the US dollar Japanese yen does not break under 113.60. But absolutely, if it takes out the low that was made yesterday of 112.55, let's just say 100. If it takes out 112 in the next 3 sessions going into Monday or Tuesday, that means Friday, Monday, Tuesday, that's going to suggest to me that the euro dollar is done for now, that the dollar itself is going to break its low and continue in this downtrend. And even more importantly, that the weekly chart, which remember I drew in this rectangle, is going to break its support, and the MACD will turn negative, and the stochastic is 78%, and the weekly is going to go lower. That makes this a really important phase. My monthly chart says so far nothing wrong. The weekly chart says, hey, it's a pullback. It's what you can expect. Nothing wrong. The dollar, remember the other day I said if the dollar closes in the 99s, then there is something different. So just make it really clear. Now, would I be having a trade in these positions right now? To me, it's a little difficult because you've got a decided downtrend in the dollar for the shorter term. You've got a decided EUR USD in the euro dollar currency pair. It has made a peak D, but it's holding the 9 EMA. The MACD is good. Stochastic's at 84%. I mean, so far, this is nice action. The weekly chart says, why don't you do what you usually do, and that is to draw in an arch formation, and that says, 1.081-ish will be resistance if it can get there. Meantime, back at the ranch, the most important thing, I said this yesterday, is if the euro-dollar currency pair can get into the 1.080 area and hold there for, because the daily chart I'm looking at, over a period of 3 hours during the day, there's a real good chance it's going to try to test the high of 1.087. Right now, we're just stuck in this range. And if you're in a range, the worst thing you can do is try to trade the range. If you were up at the top and getting a peak D, then you could go short the euro dollar because you've got your D, and D could pull back sharply, and you know exactly what to do. 1 penny above the previous sign, you're out. But at this point, you've already made some kind of a move. The dollar's already pulled back. I just think it's kind of stuck. I would not be surprised if Monday afternoon, Tuesday afternoon, we start to get a trend reversal that we can really identify with the Dow in the 19,650s or lower, or in the 19,960s or higher. That to me is really, it makes it just simple. 20,000 above, the Dow is very positive. 19,600 or lower, it says be careful. And that's the way it has to be. And for the VIX index, trading in the high 13s to the 14s, and you're in trouble. Scott in Safety Harbor, how are you, Scott?
You remember, everything's fantastic. Do you remember a few weeks ago I was asking you about how I would formulate a trade on Facebook because I just had this hunch that it was going to blow topside? Well, I never was able to get an options. I will hold on.
Oh, you were doing it at option. Hey, we've got a break coming up. Hold on, Scott. We're back after the break. I'll do a little work on Facebook. As soon as we get back with Scott, Dow's down 36. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we're looking at the NQ 10-minute chart. It shows a peak D right there, just like the E-mini did. Pull back. You see this long-term trend, long-term meaning a 10-minute chart from yesterday at 11 o'clock. Up trend line, held it beautifully, went to the Chapman Wave inside track, and now it's trying to rally. This is new leg, gray leg B. And I just wanted to show the long-term charts. Here's the yield. I had a question, would I show the charts? There's the weekly, 31.97, the high of the week of the 16th of December in the yields. That must not be taken out. And here you are with the Chapman Wave inside track, repellent zone user right there. So now we can go back to Scott. Scott, congratulations on that Facebook trade.
Yeah,
so the
I ended
Facebook
up just purchasing the stock straight out. Back then it was 117 at that time we spoke, and I made a few phone calls, and I tell you, somebody needs to get out there and help people with that. I know that that TD Ameritrade has that and so forth, but they don't really. No one can really tell you what to do. You know what I mean? They're all trying to stay. They're trying to stay. How would you say neutral? Because they don't want you to call back and say, "Well, you said." But anyway, I couldn't get it formulated. I tried to do what you said, but I'm just not smart enough. But I was smart enough to be able to pick the stock early and blew out of it a few days ago when it spiked to 127, which is at today. So I've got that under my belt. I'm still the best stock picker in the world, I think, and the dumbest. If anybody thinks I'm thinking how smart I am, I'm absolutely a complete idiot. I barely know what a PE ratio is, and I'll tell you the truth. When I've started to study a lot of things, I don't do as well. So for some reason, I think it's my advertising background. I just have a feel for kind of like public perception of things, in other words. Anyway, my question to the genius, you being, is I got into X and got out of it yesterday, and I'm looking for another entry point right now. So you got to get your opinion.
Okay, so U.S. Steel is in play, but it's in play only the way that Scott is trading it. He's in it and he's out of it, and you can see by the green and red candles, it just goes up and down, is making lower highs and lower lows. And one of the things I'm going to suggest to you is that if U.S. Steel at $32.87 right now, down $2.06. Yesterday it was up $2.80 or something. So I'm looking at this and I'm saying it's telling me a story. This is what I mentioned to my subscribers this morning. Alcoa and U.S. Steel and General Motors are the three background, foreground stocks that we want to be looking at. When I say background, I mean I want to keep them in my focus all the time because they're going to be telling me something about the economy in about 2 to 3 months' time that might be really important. That's number one. Number two, the reason why I want to keep it in the foreground is that as trading vehicles, I think U.S. Steel is getting closer and closer to something that says if it doesn't break down below 30, but instead can hold in the 32 to 31 area, there could be a nicer bounce next time if it's going to work. So that's the way I'm looking at it right now.
And what you said just now, Basil, is the detriment of a lot of guys that I know that I trade with. And I could tell when I called them today, I said, how's it going? And I said, well, okay. I mean, because what you're saying is absolutely true. But people, please take profits. And 90% of the time when a stock blows topside, the next day it's going to be down. So
Correct.
Please take profits. I mean, I don't know what these guys are thinking of. When they got something on their screen that says they just made $4,000 or $5,000, take it.
Listen, so Scott, I just wanted to ask you, I had a question about 3 weeks ago, but we have not been in touch all that much lately. But someone had asked me if they also live in your area and they just wanted to say hi and meet with you. So if you could send me an email, I'd appreciate it so that I can, if you don't mind, I can put them in touch with you.
Yeah, no problem at all.
They're in the Safety Harbor Clearwater area.
I will give you I will call back and give it to your guy there.
Okay, well, you can just send me an email. So this is what I wanted to say.
The X, you're looking at a stability jumping up and down within a tight range right now, but a possibility of a jump. But then if it gets below 30, you're saying then we're looking. I mean, people forget it was $17 a very short time ago.
So it's had a huge move up. It needs to consolidate. That's what it's doing. If it closes under 30, then it's going to take a longer time out. But my thinking is on a shorter term. Something is going on with U.S. Steel that is really important. It's making slightly reduced time from 39.14 to 32. That is to almost 20%, 18%. It's still using time after the spectacular move that it's had, $6.80 back in 2016, and all of a sudden we're looking at a stock that goes to 39.
Yeah,
it needs
I'm glad
a
that you're mentioning that because a lot of people for some reason don't like to look down. I mean, that we're talking a year ago, not 10 years ago.
Correct.
So a lot of these things, as Wall Street likes to say, are already baked in. All this infrastructure. So I just get so nervous for people when they won't look down and see where something was.
Right. So, okay, so we're going to be watching this together. Congratulations. That was a really nice move, and you got out of it. Now it's pulling back almost as much as yesterday. But what I am looking at in U.S. Steel is on a fundamental level. Those very heavy-duty areas, the cyclicals, like aluminum, like the steels, I'm watching them really closely, and let me see what General Motors is doing today. Hey, General Motors is hanging in there, 37.59. We got stopped out, unfortunately, at a beautiful entry point way down in the 33s, and we got stopped out for a profit, but then it just capped to the upside. And
for
now,
some
because
reason,
of this,
Basil, I can't play around with car companies or airlines. I don't know why. But I just can't do it for some reason. But
the reason why is because they've been broke so many times over the decades. That's the reason why.
Well, I guess
simple.
I keep remembering the day that a buddy of mine says, I just bought 30,000 shares of Ford, and I'm like, 30,000 shares? And he says, yeah, $2.40. I'm like, oh, right, yeah.
Okay, well, some people did that. We used to have a wonderful host here, and he was in the commodities, and I have to tell you that it was Ed Young, and Ed said when Ford was down there in the 2s and 1s, he said, got to buy it. He had a couple of fantastic trades in those in that.
But what people have to
period.
Remember about that few weeks was it was a flip of a coin. Did you buy GM at $3 or Ford at $2? Well, GM went out of business. You would have lost everything.
I know people that lost a bundle with GM. I mean, you've got to put it where it is. You never know. So, yeah. So, hey, congratulations on that trade.
I stopped there the other day for the heck of it and looked at an Explorer because I've always been with another brand, GM. And I'm telling you, Basil, that Explorer was nice. I mean,
Yeah,
modern and...
I was at the auto show and I looked in the General Motors lineup. I liked very much. Love the Chev. They've done a fantastic job. Cadillac, first time I can say the Cadillac since 1955. This is the first time the Cadillac starts to have all the qualities, and instead of just having accoutrements, which is what all the American car companies did, they made the most fantastic cup holders, but they used plastic parts for the engine. Now they're finally doing things right. I must say, I think that the U.S. auto companies are going to be back again and back and strong. I hope so.
But
so,
Americans love their bling, Basil, and I really think this sounds very juvenile and simple, but I think if Cadillac will put a little more chrome, you're laughing at me now, if they will keep chrome in the equation, it'll help push them to the top.
Probably right. Hey, Scott, thank you for calling. Congratulations.
Thank you. Bye-bye.
Bye. I will be back, folks. Dow's down 29, S&P's down 3, and I want to look at, I've got a couple of questions we haven't gotten to. I'll do that when we get back. XRT, RTAs, yep, we'll look at those.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So Norfolk Southern, NSC at 114.11, up $4.14, up 3.79%. See, there's something wrong with this picture. Transports are acting incredibly well. Not all the transports, the airlines, but the rails, for a number of reasons. Takeover talk, just a bunch of things, and good production there. But the Dow is not following through, and that's just part of this high-level consolidation. That's number one. Number two is when we're looking at these indexes, you've got to consider where they've come from. As Scott was saying just now, when you look at something that's gone from the 70 area, under 70, actually in the 65 area, to 116, at some point you're going to get some kind of a consolidation. It's going to be time and price probably. So XRT, which is the other retail index, it's the S&P, Spider S&P retail. It has Groupon, GPS, it's Gap, out of something other, Francisco, women's clothes. This is not acting well at all. It's acting very poorly. And I'd mentioned yesterday that BBY, which was Best Buy, had a little bit better chart, but both of them, both Best Buy, and then I had a follow-up email from Paul talking about BBBY. He thinks I'm nuts. He thinks that BBBY is going to go higher. I just don't see it. And he said I had some agenda. I had no agenda. I'm looking at the chart. It has an H to an M pattern. This is Best Buy. And that pattern will fail. If it takes out 40 support, it's in real trouble. So I just don't see anything there. The RTH index was funny. We wanted to short it the very day of the high. Couldn't get the shares. I said, okay, it doesn't matter. Look at it. It goes from the 80 area down to 76. It's trading at 77 right now. Leg B, leg C. This could be a peak C. It's just stuck in a range. But it is a high-level consolidation for the market vectors retail ETF. That is different to the XRT, which is not good. So, we got stocks. You got so many. I mean, Macy's was the best of the best, and it made a peak F top back in the summer of 2015, up in the 74 area, trading at 29. More than 50% lower. Okay, so Sarah wants to know Morgan Stanley. Morgan Stanley, it seems to me, is giving back. Now that was an ABC. This was a G/C potential. You know what? Tomorrow is Technical Friday. I'm going to do this in more detail. Someone remind me. I'll put MS here. I'll write in my notebook. MS Friday. Of course, I have to read that. Someone remind me. Let's do a little bit more detail. Made a peak F doji high in the weekly chart. So that's that. Yeah, I did show that. Let me show it again. Oh, Gringo wants to know. Yep, there's your yield, the triple yield chart, 31.97. We're in that inside track resistance area right now. Let's see what happens. This is going to be a very important week coming up, going to Wednesday, because yields could go higher, yields could go lower. Everything's on the table. And you've got to remember, I need to say this. So Trump is coming in as the business-friendly president. However, you don't know what he's going to say, and you don't know who he's going to point to and who he's not going to point to. So be careful out there. We've had a very big rally in the financials, so the financials technically need some kind of a pullback. All I'm saying is that you don't know, and therefore be a little bit careful. I'd be a little cautious right now, and that's kind of what we are in my opening call of one of our fused positions. We have quite a few short positions, and not so much on the long side. And I don't mind adding to the long side as soon as I feel ready. So let's do this. You hold tight. You've got programming right through the rest of the day. Fabulous shows coming up. I'll be back with Tom later today. Otherwise, I'll see you tomorrow. Have a great day. Dow's down 33, and we will talk tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.